Olivia Bono-Voznenko for Modern Wall Street. And look what we have here. It's Sarge Guilfoyle, Chief Economist at Stewart Frankel. Hey, Chief, happy September 1st.
Happy September 1st, Olivia. I hope you had a nice summer.
I did, and I don't know about you, but people here on Wall Street don't seem to like September too much. What's up with that?
There's a lot going on there. I mean, nobody seems to know why September is weaker more than most of the other months, but it really has a lot to do with the fiscal year. The U.S. government's fiscal year ends on September 30th. Therefore, the military and all the government agencies have less money to spend in September than they will in October when they have brand new checkbooks to play with. Not just that, a lot of your hedge funds and mutual funds also have fiscal years that end at this time. So there really is a reason, not to mention college tuition, right? I almost forgot to say that. As a middle-aged man, I'm familiar with that. And a lot of people who have to foot the bill for college have to write that check around this time of the year. And so you have a lot of reasons here why September might be a month where some money might not be moving around or might come out of the market to some degree.
Well, Sarge, I'm in good spirits today. It's Thursday. It's the Voz and Sarge Day. Now, tomorrow we have big news, non-farm payrolls. The forecast is going to be 185,000. So tell me, what's going to happen if this comes in at 230?
If it comes in at 230, it could force the Fed's hand here to some degree to go ahead with an increase in the Fed funds rate. Now, the whisper numbers are around 150. So if it comes in below, it gives them a lot more wiggle room. And today we had a really horrible ISM manufacturing number, which puts August industrial production into a bad spot, I would say, into a spot where they have to watch it. We also had lousy auto sales, which will put headline retail sales in the same kind of spot that they have to watch it. And we get another retail sales report and industrial production report before the next FOMC meeting. So I think that maybe tomorrow's number isn't the beginning and the end, as we had previously thought. I think there are a couple of other numbers that come out prior to September 21st that they have to pay attention to before they make a decision. It will be interesting.
Well, since we're on the topic of labor, it is Labor Day weekend. What kind of holiday trade are we seeing?
We're seeing some light trade. We saw a little bit of a reversal today of what we've been seeing when the assumption was that most of these Fed officials were heading towards an interest rate hike. Today we saw the financials, some money came out of the financials, some money came back into gold. Treasuries got a little stronger as the day went on. Oil got hit. Technically, oil broke a little bit. This has nothing to do with the Fed, but it's a technical break from 45.75. It's now down in the low $43-ish range. It's probably heading for a test at 42.5. Now, when it hits 42.5, it'll either bounce and stay between 42.5 and 45.75, or it will break and go down to $40. So oil is something you want to watch very closely. And if you're trading the energy space, I think you want protection on your trades. You don't want to be naked in the equity space there.
All right. Well, we are so close to our 3-day weekend. Thank you so much, Stephen. Have a great holiday.
You too, Lass.